everybody, happy Sunday and welcome to episode 2 of the Stock Trading Pit Season 4. Today's agenda is going to be 4 segments as always. Segment 1 is going to be talking with traders with Dan and my mentor and special guest, Brian Shannon. Segment 2 is going to be the broad market recap, looking at the broad market ETFs and some crypto names into the week ahead. Segment 3 is going to be the watch list with Sara Strat, Sniper, and myself. And segment 4 is going to be the weekend chart request, looking at some different charts and individual names into the week ahead. So sit back, relax, and let's get started.
Hey everybody, welcome to another segment of Talking with Traders. Today I've got one of my favorite traders on FinTwits, a great guy who I've got the great honor of knowing for a little while here, Brian Shannon of Alpha Trends. Brian, thank you for being here. Thanks again for being on again.
Always a pleasure to be on, Dan. Good to see you.
It's great to see you too, man. Since you've been on a few times in the past, and for those watching who haven't seen him, definitely go back and check those old sessions out. I thought we'd jump right into it and talk a little bit about Anchored VWAP, where it came from. So let's start there, right?
Okay. Well, go ahead. Yeah.
All right, cool. So I was going to ask, how'd you stumble on Anchored VWAP? How'd you come up with it? What brought you to it?
Well, back probably 15, 16 years ago, I was trading on a platform called Realtick. And Realtick was, back in the day, that was the platform to go to. It was expensive, though. Fortunately, I was, where I was trading, they provided it for me and that sort of thing. But just, as a trader, you're always tinkering around, looking at what tools are available to you on the platform, looking at, different oscillators and indicators. And I had stumbled across this, there was a trend line box where you could draw horizontal trend line or point to point. And then it said something called VWAP. And I looked at that VWAP trend line and I would put it on a spot and try to draw, an uptrend line, let's say. And I noticed the line just would kind of go sideways, but it would move up and down based on where I was dragging it from and to. And so I started looking into it a little bit. A friend of mine had a brother who traded the euro dollar, and he said, "Oh yeah, VWAP. That's what that is." And then I looked on the chart. There was a VWAP available. It was available for that day only. So it started out as an institutional benchmark for to determine, whether or not a customer was getting a good price for an order. If they were to buy 500,000 shares of Apple through Goldman Sachs, how do they measure whether Goldman Sachs did a good job for them that day? Well, the volume weighted average price is simply the average price the stock traded at for whatever session you're measuring. Again, initially, it started out just as one day. So if the stock traded, let's say it closed at 125 and the low was 124 and the high was 126, if I got my fill back from Goldman, and again, the close was 125, they might say, yeah, we filled you at 125 and a half. And I'd say, well, how do I know if that's good or not? It doesn't sound good. But if they told me that the volume weighted average price was actually 125.75 and they saved me money, then I look at that and say, okay, Goldman did a good job. Or if I look at it and say the volume weighted average price that day was 124.50 and they're filling me at 125.50, well, they did a horrible job and I'm going to go somewhere else. So that's how it started out. Now, I had independently kind of started messing around with it, and I realized that if I put the volume weighted average price on there, I could then switch the time frame intraday to like 2 days. And I would notice that the volume weighted average price, it would give me the volume weighted average price for the last 2 days. And if I switched it to 4 days, it would be the 4 day. I couldn't put multiple volume weighted average prices on there, and I couldn't anchor from an intraday area. But I started really getting curious about the way that it moves. Fast forward, so I started using that in day trading mainly, and wrote an article about chase the gap or wait for VWAP. I think that was in about 2012 or 2013. And that was simply a strategy for making sure you're not paying too much on the open for a stock that might have gapped higher, or shorting too soon if it gapped down. So the way I looked at it was there's something going on with this, and I traded successfully with it for a number of years. Anyways, again, fast forward 10 years, another platform said, hey, Brian, we want you to use our charts in your trading videos. I said, well, if you could do this, if you could make it so I could anchor it from any point I want, I'll do that. And they created it. So I didn't invent the anchored volume weighted average price. There was actually a guy named Paul Levine who had written about it 20 or so years ago, 1988, I think it was. Well, 88 is when it became an official benchmark. He might have written about it in 92. Anyways, since then, they put it on the platform. You guys have it on TrendSpider. I can't say I invented it, but I know for a fact that it hasn't been on any platforms without me being the champion of it over and over again. And I've kind of, taken the lead in that and been, the face of the anchored volume weighted average price for the last decade or so.
You've definitely brought it to light. I remember when I first saw you present it at Chart Summit. It's like 3 years ago, and I was like, "That's interesting, right?"
Yeah.
So how should a trader think about it, right? Do you think of it as a leading indicator, or how do you look at it? How do you use it?
Well, it leads me, it
Okay.
leads this horse to the water, at least. When I see a stock pulling back, let's say, to an important anchored volume weighted average price in the market, let's say, I'll say that's a level of interest to me. So for instance, in the SPY right now, we've got the anchored volume weighted average price from the March low that is at about 403. Now we closed at 411 today after gapping lower and then coming back up. But I think that's the next important level on the downside where we're likely to see that level of interest come in. And what I mean by that is it's potential support. I never like to call a level support unless it's tested and held as support. And it's kind of a pet peeve of mine. People say, hey, there's support here or there's support there. And then you stick in a bid and what happens? Right down. Mm-hmm. So it's a potential level of support. It is an area of interest where I can then drill down to a shorter term time frame. And on that shorter term time frame, let's say we're on a 1 minute chart. Let's say the SPY gaps down and it's trading at that level, but it's below the daily volume weighted average price. The daily volume weighted average price will be declining and it'll start to flatten out. If the price gets back above the daily volume weighted average price, then I know from a day trade perspective, my odds are I can probably trade against this level. So I'll use the shorter term time frame as my entry point into the bigger term, level of interest that was identified prior. And then the rest, of course, is up to the market. Will I get stopped out, or will I be able to trail my stops up, start taking, peeling some off as it goes in my direction? And that's kind of it in a nutshell. One quick thing though, Dan, for people to really conceptualize what the volume weighted average price represents, it's really best thought of as, the dollar cost average over any period of time. So when you think of dollar cost averaging into any stock that you buy, let's say you buy $1,000 worth of Microsoft every month. Well, some months you're going to pay a higher price and get less shares. Some months the stock will be down and you'll have more shares. What you want to know, and what the government wants to know when you go to sell that, is what's your average price? Your volume weighted average price is really the cost basis, because you're adjusting it for, the dollar amount is $12,000 at the end of the year, but what's the volume that we're adjusting it for? So it's price and time based on, the amount of trading that occurred, at that level.
Is that why you think it works, right? As a possible support or resistance level?
Because I think it works.
Go ahead. Sorry.
Yeah, I think it works because it represents supply and demand. So if we're looking at an important low in the market and we anchor a volume weighted average price from there, we'll often see that it does, in fact, become almost precisely. I mean, it's scary sometimes. This, how crazily, it'll nail the low. I think that what we have happening is that there are trend following programs that say, hey, since that low began and this upward momentum campaign began, we are still comfortable participating in the market on the long side. And we want to buy as close to that as possible. And you think about, well, who does that? We're talking about institutions. We're talking about pension funds. We're talking about retirement accounts. The biggest money on the planet, who has to always be buying, but where do they buy? Where's the smartest place for them to buy? Closer to the mean. If they can buy closer to the mean, then they've got a better advantage. So I think that you see there's a lot of programs based around that. You'll see that in the week to date volume weighted average price, month to date, quarter to date, because a lot of big institutions have their investment committees where they sit around and they decide, okay, for the second quarter or for the third quarter of this year, here's the way we want to position. We want to lighten up on these stocks. So they'll say over the next quarter, we're going to sell 50 million of our 350 million share position in Apple. And they will kind of say, okay, we'll use the volume weighted average price for the quarter as a benchmark to see how well we did. And you'll see that's why if it comes up to that level, if the stock's in a downtrend, if it comes up to that volume weighted average price, you'll see that there's a lot of supply there, because that is one of those, one or more of those institutions using a program such as that.
Yeah. It's become one of my favorite indicators. I think one of just a few that I use, and you're right, it is scary. I mean, Bitcoin today, right, came right up to it. You see that on the indices all the time. So we've talked a lot about what's great about anchored VWAP. What are some of the flaws, right? Like, where do you see its blind spot?
I think that, Dan, really, to me, it's the tool itself is completely objective. It's price, it's volume, it's time. Price, you can't argue with. Volume is going to be whatever it is. Time is where it gets interesting, because my time frame versus other people's time frames is going to be different. And we have trends within trends. Of course, we can say we're in a bull market, but for the NASDAQ, we're 8-10% off the highs. I don't know what the number is, but we've experienced a pretty good pullback, but we've been in a bearish environment for NASDAQ stocks. So the danger, I think, is in the user and trying to curve fit, and looking at the volume weighted average price and saying, okay, well, if I anchor a volume weighted average price from there, that tells me I'm at the low, so I'm going to buy it, rather than anchoring it from the correct place, which might be a lower low previous. Now, and that's why. So part of it is, one, the user anchoring from the wrong place, and two, the user looking at it as an absolute level to buy. I think with any, a 50-day moving average, even, we bounced off the 50-day moving average in the S&P 500 today. Why is there support there? Well, it's a psychological level. Enough people have been trained to buy at that level, to not sell at that level, that when it gets there, selling dries up, demand increases. It's supply and demand. So if you think about conceptually what's happening behind the scenes, you wait for the evidence that it's actually happening. Now, some people, their preference is, I'm just going to stick in a bid right there at that point. And that's fine. We need participants to do that because they help reinforce that level is a level of importance. For me, I don't want to be the first guy there. I want to be the right guy. I want to know, hey, we're at least back above the daily volume weighted average price. Are the buyers taking back control here today for this session? And if so, how can we build upon that? And then taking it and building out one day at a time after that. If today is an important low, well, then tomorrow, today's volume weighted average price will likely become a level that's defended on any pullbacks, and then may possibly present a buying opportunity.
That makes a lot of sense. Besides anchoring in the wrong spot, you mentioned treating it as an absolute level is one of the mistakes that a lot of people make. How much wiggle room do you usually give it? Like, are you talking a standard deviation or a couple percentage points off? How do you look at that?
So one of the great tools that you guys have is to be able to put a standard deviation, a little percentage band around it. To me, I just like to know the absolute level. I just want the number. In my mind, I've already drawn in that little band that's around it. And I just like to keep my charts cleaner, but it's a great way of reinforcing for people that, hey, expect a little bit of wiggle room around there. Now, how much? I think that it depends on the stock, the price, the volume, but realistically, I don't really look at it that way because
Okay.
again, I'm not looking for it to be the absolute level. It's the level of interest that tells me, okay, now I want to dial in closer, zoom in on a shorter term time frame and see, is there actually evidence that the buyers are gaining back control in here? And if the answer is yes, then I want to take, I want to, take advantage of that opportunity. And then of course set my stop just in case it's wrong. And that's, it goes back to risk management. We have to have, we have to know our risk in advance of what we're willing to accept so that we don't fall in love with stocks like Tesla and buy it from 850 to 800 to 750 to 700, 650, etc. It's a
Yep.
the company, it's a good company. People will say, okay, but what about the stock? If the stock is going down, do you want to buy the dip while it's still dipping? Or do you just chill, wait, let it set up? So Tesla's on a 200-day moving average, and it's trying to find support in there. It hasn't, in fact, it hasn't definitively found that support. So it's still, hovering around this level of interest. Some people will say, well, if it closes below the 200-day moving average, I'm out. The direction of the 200-day moving average is still trending higher. So one close isn't going to matter. It's, most likely some program trying to scare those people out so they can get more in that area. There's always, little shenanigans going on around there. And, while you try to think about the psychology, you have to understand that these programs have been trained to it's in the machine learning. If we can, bring it down to the 200, rally it a little bit and shake it below the 200, there's going to be a lot of stops under there, but we can come in and grab those shares, reduce our cost basis and be the smart ones in the market. That's the way I think that you have to look at it, again, not as an absolute, but instead as a level of interest.
I think that's good advice. So I'm just curious. Besides anchored VWAP, do you look at any other indicators at all?
I look at price, I look at volume, and I look at multiple timeframes. I look at simple moving averages. People will say, well, simple or exponential. And to me, it doesn't matter. If you say a 20-day moving average, simple versus 20 exponential, they're going to be basically in the same place. And again, it's the way I use a moving average is it's pulled back to a level of interest. It doesn't mean buy it. I might buy it earlier with an EMA and it pulls back to the SMA and, you get involved in those little gains. Instead, it's a level of interest. But I do use the volume profile a little bit as well. Not as often as I maybe should, but I do like to look at volume by price. But that's pretty much it. I don't use any MACD, stochastic. I've looked at those in the past. I don't have any problem with them. If they help people make better decisions, I would encourage, do what works for you. And that's the thing in the market, that people have to find their style. I've been doing this full time for over 30 years now, Dan, 1991. And I didn't come out knowing what, being the trader I am today just automatically. There's a lot of trial and error. And when people are newer to trading, they've got to just go slow, not swing for the fences, find out who they are in the market. I said this to somebody else the other day that, one of my favorite phrases is, if you don't know who you are, the markets are an expensive place to learn. And that goes for your trading style more than anything. If you're still, jumping from this hot stock to that hot stock, then, you're always going to be chasing your tail. It's about anticipation, not reaction.
I would agree. One thing you mentioned, using multiple time frames. You wrote a book about this, and for
Right.
those watching, definitely check it out. I'll put a link in the bottom of the video. But how do you use multiple time frames in conjunction with anchored VWAP? How should users think about that?
Okay, so the way, if I just boil it down in a real quick nutshell, I would look at least 3 time frames. So I'm a swing trader, and the way I will look at it is, initially I'll look at a daily time frame, and just to kind of see the bigger picture, what's going on here. If it looks like I don't need to go further back in time, And so on a daily time frame, I'm going to look at 200 days, let's say. And if if it looks like it's at all-time highs, well, I might then zoom out to a weekly. But generally, I'll look at the daily time frame, and if it's if the 50-day moving average is rising, it's innocent until proven guilty in my mind. It's a stock that I would consider as a buy opportunity. But then I'll drill down to either a 65-minute or 30-minute time frame to try to figure out what are the key levels. Those key levels, it might be at a rising 20-day moving average. It might be at a volume weighted average price from the prior swing low. So if it's in there, I'll look at the 30-minute time frame or 65-minute, and I'll look at the prior high, anchor a VWAP off of that. And as that VWAP comes down and flattens out, it pinches between them and creates a compression of energy where the longer term trend is still higher. So we give the benefit of that to the buyers, but there's still selling pressure as the stock is coming down and undergoing this profit taking. And we don't know if it's going to turn into something bigger on the downside, but once it starts finding buyers along the rising volume weighted average price, and then the volume weighted average price from the prior peak starts compressing down on it and flattening out, then I know that we're getting ready for either a range expansion from that compression, and a trend once established is more likely to continue in the direction of the trend than reverse. Just basic technical analysis 101. So we give the benefit of the doubt to the larger term picture. We wait for price confirmation that I can now establish my risk reward on that 30-minute or 65-minute time frame. And then finally, I'll go down to a 10-minute or even 2-minute time frame to really just fine tune the entry and say, now's the time where I can get involved in this stock. I know where my risk is. It looks like the buyers are coming back into this stock now. I've got the wind at my back a little bit. Now's the time to get involved.
Okay. You go a lot more intraday than I ever do. How do you find that 2 minutes or sub 15-minute time frames are too choppy, or
No, so my real strength, Dan, is in my entries. I mean,
Okay.
it truly is my best strength. My weakness is that I sell things too soon, but I'm okay with my weakness because that's actually kept me in the game a long time. Having tight stops in that. So I try to go in heavy, or I don't try, I do. I typically go in pretty heavy when I feel right about the stock right away. I don't layer up. I don't average down. I get in all at once. And then as I get that first move, if I'm right, I sell a little bit real quick to reduce the risk because I'm going in heavier than I probably should, or heavier than I want to hold for a swing trade. So I try to reduce my risk by taking a little bit off. And a lot of times that'll be, so another tool I use actually is just they call it, the floor trader pivot analysis. So if it runs to daily R2 on the day that I buy it, and it's, maybe, let's say it's a $30 stock, it might run 47 cents to daily R2. I almost always sell a third there just to reduce my risk on the 2/3 I'm holding. And now my break even might be my cost basis rather than actually, having it turn into a loss. So again, that's my strength is I get in, I believe, at the correct time. And the reason I do that is because I look at these shorter term time frames and I understand how the cycles interweave and fit together to find that perfect opportunity where the trends are aligned, which the name of my book, Technical Analysis Using Multiple Time Frames, Profiting from Trend Alignment.
Beautiful. So Brian, thank you. We're hitting up time. Everyone watching, Brian Shannon's a person that you can learn a lot from. I know I have. I'm grateful that you came on the show today.
Well, thanks, Dan, for having it in the platform, making it available to everyone, being a leader and showing people how to use it. You and Jake and everyone else. It's really exciting to see.
You've shown the world the light, in my opinion. I'll be grateful for you for a long time as a trader, right? Because anchored VWAPs made me better. So again, thank you very much. Love having you on.
Thanks,
everybody.
Dan.
Check the description below. We'll have links to Brian's Twitter. We'll have links to his website and links to his book in case you want to check that out.
Alrighty, let's look at the broad markets after a pretty wacky week. Some crazy chop here, but going over the broad markets, we're always going to start with SPY. We'll do crypto at the end. SPY actually had a decent breakout on Thursday. So if we kind of remove this red area and just look at this trend line break, you can see that we had a nice balloon breakout here on Thursday. Now, what happened on Friday was we did have a continuation up. We had a nice move up initially, but then we have this, we have this huge volume area that just acted as a hard level of supply, kind of a wall for price. We couldn't get through it and started to pull back. So definitely, the right idea on Thursday and into Friday with the move up, but just couldn't get through this supply zone. That's exactly why you always want to use not just raindrops, not just one indicator or tool. You want to use a toolbox, a set of tools. So you really can look at everything in a better picture. And if you would have used the anchored volume by price from those March lows, that would have been really the thing to watch after this balloon breakout. Now, on the weekly side of things, we didn't really do much. We closed inside this previous week. The previous week was a huge move down. So the fact that we did close right within this range, makes sense because it was just such a big range that we kind of were trying to get through. The good thing is we did not break the previous week's low. So that is something to consider on the bull side of things. Now going into the Qs, we did have a decent week here, definitely better than the SPY. You can see here that we did have a little bit of crazy chop as well. We bounced off this previous support line that we were talking about last week. And you can see here that we kind of just bounced textbook off of this area highlighted in green, which is going to be your break-even demand zone. The area highlighted in orange is our volume gap. And then you can see here that we were rejected right at this supply zone, this next volume node above on Friday. And not a lot of volume at the top of the range. So not necessarily the strongest move into the week ahead. But all in all, we did get the green week. So if you remember last week, we were talking about seasonality. This week had an 80% win rate over the last 5 years. So we were right in line with that. So price action did fall in line with seasonality. Now going into the IWM side of things, you'll see here that nothing really new to talk about. I mean, this supply zone. So let me set up the chart here. We'll turn off the volume by price on the daily. On the weekly side of things, we'll add the volume by price from the COVID lows. And as I mentioned, really nothing different here. We are just stuck at this supply zone, this area highlighted in red. The price just cannot get through this area. There's a lot of people probably, maybe break even selling. We're just stuck. So the one thing to keep in mind as well on the daily side of things, we're still pretty early on in this symmetrical triangle. We could easily do one of these for the next, literally month and a half. So there's a lot of room within the symmetrical triangle to move. Now, if you do want to just set your alerts and forget, remember you can create an alert at these trend lines. Maybe you want to just play the resistance and support. You can use the touch feature, add your sensitivity, which means just essentially the zone that you want to be alerted at, and then set your alerts and forget. And then when they go off, once you get that text, it's time to go back to the charts. But for now, just really not much to talk about on IWM. I wish there was more to say. The main thing is the symmetrical triangle and the supply zone on the weekly side of things from the anchored volume by price anchored at the COVID lows. Next one is DIA. DIA is looking a little iffy here as well. If we anchor the volume by price from the March lows, you'll see here that we did bounce exactly where you'd expect, right at this volume shelf and right at this anchored VWAP, which is the handoff from this original March low anchored VWAP. So remember, a handoff is just when the last candle touches this original anchored VWAP. So since there's not another candle that has touched this original anchored VWAP, that's where we're going to anchor another VWAP from. And you can tell this has acted as a pretty strong level 3 times over the last 2 weeks. So definitely holding for now. We'll have to see if we can get above this volume shelf here going into the next week. We also have a gap above. So if we turn on the gap snake here, you'll see that this gap above is right around 347 is where we'd fill. And we actually did fill the gap below from earlier this week. So the gap above is one to watch, but we also have another gap below from April, and that would fill at around 331. So really gap above and gap below. Let's see what price action does, and we'll take it from there. That's all we can do. Now, on the weekly side of things, if we turn off the volume by price, you'll see here that we do have a really clean ascending wedge here. The question is, which way do we go, the upside or the downside? And instead of guessing, same thing, just create an alert on both sides. So, let's say maybe you just want to know when the price actually breaks through this line on the 30-minute chart. You name it support below, maybe have it expire in 15 days, create the alert. So you've got your alert on the bottom. Same thing here. Maybe you just want to know when the price actually breaks through this area. Just name this resistance above. Also expires in 15 days. You can always, reactivate these, but for now, we'll just do 15 days. And so now you don't have to guess which way the price is going to go through this ascending wedge. You simply just wait for the alert to go off, and whatever text message you get, whatever trend line broke, maybe that's the way you go. Maybe you think it's a false breakout and you want to short it. Maybe you think it's a false breakdown and you want to go long. That's up to you as the individual trader. Going into GLD. GLD is another one that has really had some pretty strong relative volume moves to the upside. So if you haven't used our relative volume feature yet, it is really cool, especially when you're looking at uptrends or downtrends. So in this case, you can see what we have here is we have the relative volume indicator. This line here in the middle, we'll just make it this green line. This is the average volume over the last 20 days. So as the volume does its thing, and as these 20 days continue to happen, we can see, how is volume doing relative to the average? In this case, it's the 20-day average. So as we've moved up, you can see anything that's shaded in green has been above average volume. So we know that this uptrend has been on above average volume. And so that shows that there's definitely some conviction on this move. Now, on the weekly side of things, you can see that we did break out of this longer term trend line. So if we do continue up, definitely this next area above, this is a trend line that the system randomly found for me, but right around, let's say, right around 180 to 185. You always have to use zones. You're never going to have a perfect touch of any exact price level. But in this case, I put a sensitivity alert around this trend line. So if we do continue up, that would be an area to watch above if this breakout really is a true breakout. But based on the relative volume, it does seem like there's some above average volume backing this. Now, looking at the VIX, not a ton to look at on the VIX, honestly. One thing I'd mention here is, one, there's a gap above. So keep that in mind that we do have the gap snake showing this gap above, which would fill around 22 or so. But another thing I'd want to point out here is the seasonality. So if we look at the day of the week seasonality since the beginning of the year, this was right in line. Friday's move was right in line with the seasonality. Only 21% of the time does VIX close green on Friday, and we did close red once again on Friday. So another loser to add to Friday. And another way to look at this is, if you have a 21% win rate, you have a 79% loss rate. So 79% of the time, Friday closes red versus Thursday. So seasonality works really well on VIX. So if you haven't used it on VIX, definitely check that out. Now we'll jump into a couple of crypto names. We're just going to do Bitcoin and Ethereum. Starting with Bitcoin, not a lot to go over on the bullish side of things, unfortunately. If you guys remember from last week, we were talking about this ascending triangle breakdown. So ascending triangle is just, you've got your flat resistance, you've got your ascending support. So we did have that breakdown last week. We continued down and really flushed. And you can see here the levels below to watch would be this anchored VWAP from the COVID lows, let's say right around 25 to 26,000. There's too much volatility to even mention a couple $100. I would say you've got $1,000 range here. So if you did want to create an alert on this lower VWAPs from the COVID lows, right click, create an alert, and you can go all the way to honestly $3,200 around this area. So you can create quite a bit of sensitivity zone around this area, so you're not just being alerted right at the line, because that's likely not going to happen with Bitcoin. There's just too much volatility around these levels. So one thing I also want to point out here is when we did start the move down in early May, I wanted to point out here that we did see above average volume here as well. So pretty much opposite of what we just saw on GLD. So as we are moving down, you can see these green shaded areas are pointing to above average volume on the move down. So there was definitely conviction on this move down. It was not a move down on low volume. And you can see that we are starting to break down. Now, another thing I want to point out here, and this is a cool raindrop case study. Notice within this wick, and I'm just going to highlight it here. Notice within this wick on Wednesday, if we turn on the raindrop chart, there wasn't a lot of volume in this wick. Now, somebody mentioned the other day, well, the volume was huge on Wednesday. That is correct, but we're talking about relative volume. So relatively speaking, a majority of that volume was at the top of the range, and there wasn't a lot of volume at the bottom of the range. So if you look at the relative volume here, the volume for May 18th was, or May 18th into May 19th, was over 3.3 times the 20-day average. So it was a very big volume day here. And you can see that on the right-hand side for the relative volume. These numbers are just essentially multiples. So when it says 3.5, that means 3.5 times the average. So you can see here definitely that huge spike on this move down. And now you can see that we are starting to have lower volume relative to the 20-day average, but still above. Now, all in all, if I were to guess, I would assume Bitcoin's going lower. There's some news coming out. So not only do you have the technicals breaking down, but you also have the fundamentals, China cracking down on cryptocurrency. That could be the nail in the coffin, at least for the short term. So, anything can happen. I'm not mega bearish on Bitcoin, but I'm also not mega bullish. There's this anchored VWAP below around 25, 26, and that's what I'm going to watch into the coming weeks. So Ethereum, same thing, honestly. We've got this trend line below. So if you look at Ethereum, we are starting to break down. If we look at the trend line below, that's right around, let's say 1800 or so. Now, if we look at the volume by price from the start of this trend line, you'll see that we bounce literally right where the textbook says to bounce. So you can see here on that capitulation day, we bounced right at this shelf below. There wasn't a lot of volume supporting price up here, so that was another thing to consider. And on the weekly side of things, you can see that we barely missed the 3.618 over the last couple of weeks. We tested right around 4,400 or so, maybe a little less than that, or maybe right at it. I'm not sure exactly what that was, but we can look. Let me just do a horizontal line right at this area. So that was 4384, at least on Coinbase. So didn't get quite to 4,400. The 3.618 was right on 4,900. And, if we did continue down, this previous high would be my area to watch around 1,400. But first, we need to get through this volume shelf around 1,800, and we'll see what happens from there. So that is an overview of the broad markets and some crypto names. Hopefully this was helpful. Now let's move on to the next segment. Alrighty, everyone, welcome to the watch list segment. We have special guest Sara Strat Sniper. That's what she's known as on Twitter. She is a big user of the Strat, which is a price action strategy created by Rob Smith. And Sara, thank you so much for joining. We're going to do this a little different this time, right? We're not necessarily going to look at the future. We're going to look at some of the past setups that you've seen play out over the last couple of weeks, right?
Yeah, and so this week it's kind of a tricky week because if you look on the screen, we've got SPY up and we're just in a weird place. And normally I share a weekly watch list every week on the weekends and I call out setups for people. And just this week I wasn't seeing anything. So I just wanted to reiterate the fact that if you don't see clarity or setups that you like, it's okay to pump the brakes. If you're not comfortable trading, don't trade. Like I haven't even traded, I think I made one trade this week so far. And it's, we're 3 days in. So
it's one of those things. A lot of people think they always have to have a watch list. Now, a watch list is fine if you're just keeping an eye on price action, but it's like you said, you don't always have to press the buy and the sell button, even though I know that is it's a fun thing to do. It's not always the best idea, especially, for your particular way you're watching the markets. It's just sometimes better to just sit on the sidelines and wait for the setup to come to you.
Yeah, and this is a very rare week. Usually I have 40 names on my watch list, and I have a hard time picking what I'm going to play, but this week just wasn't that way. So I knew to slow down. Don't force anything. We need to see how this resolves. If you go to the weekly time frame, we're just stuck in the middle. We're just stuck in the middle of last week's range. We're not really, I know it feels like we're making huge moves, but we're directionless. The market really hasn't picked which way we want to break out of last week's range. So I'm just waiting.
Yeah, I hear you. And I know you guys like to use the broadening formation, so it's interesting to see we got quite a beautiful one here on SPY, at least for now.
Yeah, especially on the daily.
So as far as the way you're trading and what previous setups that you've played in the past couple of weeks, are they mostly broadening formations? Is that kind of what you're always looking for when you have a watch list, or does it not always have to be a broadening formation with a strat setup?
No, it's usually on a larger time frame. It's usually a 2-2 reversal, like a strat setup, or an inside bar play. And a good example, I have this little watch list pulled up I wanted to talk about. So in the strat, I need to go to the monthly time frame here. So we look for inside bar setups. So this is AMC, the hype stock. We had 1, 2, 3 inside months. So then when May opened up, I had this line and alert set here. So if we broke above 1222, the monthly target was 1454, and it hit it, and then it retreated. So in the strat, we're taught to take profit when our target is hit. So this was a beautiful trade. Look at it on the daily.
Nice.
Yeah, you see right here, that was the target, 1454. It hit it and then turned red. So we were already out because that was our target. So our entry was here, target was there. Really
you
nice.
Took the entry on the breakout, right?
On the break of the 1222, which triggered the monthly buyers.
Makes sense to me, yeah.
Also, I think it had an early weekly entry. So the early entry on the week was this 2 down, and then when we broke, we opened up the next week and we went 2 up. So the early entry was 1012 for the weekly, and then we triggered the monthly at 1222, and then the target we hit at 1454.
I love it. That's the nice thing about the strat, especially your way of trading. There's always just logic behind it. There's, why did you do this? And there's always an answer, right? Some people, are like, well, I don't know, I was just feeling like it, So the nice thing about the strat is it is very logic based. If this happens, you do this. If this doesn't happen, you don't do this. And that kind of keeps things in balance.
Oh, it does. You don't have to think about it. You don't have any emotions. You say, if we break 1012, I'm long. Then if we break, 1222, I'm longer. Then if we hit this, I'm out. There's just no emotion. It's very nice.
I love it. So that's AMC. That was a very interesting one. Any other recent kind of plays that have played out that people may want to just think about moving forward? Not necessarily watch list stuff, but the same type of setup where they can kind of see, all right, well, this is what Sara looks for, has looked for, and this is what I should look for in the future if I do find something.
They happen all the time. So like this one, this was a 2 down because it broke the previous bar to the downside. So we call that a 2 down. So then the 2 up is the reversal. So if you go to GameStop, we had pretty much the exact same play. We had a 2 down, then we opened, had a 2 up. That was our first target. That was our second target. Again, we sell when 188 hits. I think it hit a high of 189, and then it dropped all the way back down. So it's just another, you can repeat this over and over and over. Enter here, exit there. Don't hold on to it, because look what happens. So people get greedy and they want more profit, and then they watch it go, you know, up 20 bucks and then down 20 bucks. And they're just sitting there like, well, I thought stocks only go up. Well, they don't.
Oh, what an interesting fallacy in the market that is. So you guys are really just using those previous highs as your targets. And it was at the monthly high from the previous month, I guess?
I believe so, yeah. No, I think we're still inside on the monthly, actually. Yeah, so we're still inside. So if we can break above the 196, you can go somewhere, but that's a big range to take out. That's not probably going to happen.
I was going to say, that's a party candle right there.
Yeah, that's what we call mother bar problems.
Mother bar problem.
Yeah, it's just stuck in the sky.
Well, I mean, you know, it would be interesting to see if GameStop, who knows where it goes, but it's just, man, that price action was just nuts. And the crazy thing is, you know, GameStop had its run and everyone's like, oh man, this went from whatever it was, 1 billion to a 15 billion or whatever market cap. And then you look at Dogecoin that went from what, you know, 7 billion to 80 billion. It's like, man, GameStop really wasn't even that crazy when you look at some of these crypto names. So,
no.
Hey, anything's possible. We could go back to 400, but you know, they recently just did an offering, so it would really have to get some momentum, because at 480 or whatever, it's going to be a higher market cap because there's more supply on the market now. So this one seems kind of stuck after that offering.
That whole diamond hands thing, it drives me nuts. That's not what traders do.
Yeah, yeah. Diamond hands has never really worked for me a ton. So yeah, I mean, it's one of those things where some people had the diamond hands and it played out, and then the next 9 times they do that, it will probably not play out. And especially if you're trading options, I think that's the scary thing. Is a lot of people think of the whole diamond hands thing with options, and it's like, well, you know, you get to a point where especially with options, even with stock, but just, yeah.
No, you're going to get murdered. You can't hold on to options.
Yeah.
The time decay.
Gotta love it. So I think we have about 5-6 more minutes left, maybe a little longer. There are a couple other ones that, you know, we talked about, either that you've seen play out in the past couple of weeks, and, you know, maybe what people can start looking at for their watch lists moving forward into the coming weeks.
Yeah, and they can follow me too. I teach this all the time on Twitter. So here's a great example of Tesla. So with the strat, we always start at the higher time frames and kind of work our way down. So Tesla, so this is a short play, obviously. The others were longs, but we had a 2 up and then we got a 2 down. So the short entry was here at 659 and the target is here at 539. We keep dancing around this level on the daily. We would have hit it today had we not gapped down, I think, but we got that gap down today. If we would have opened inside yesterday's range and triggered the low of the 18th, we would have hit that 539 for sure.
Michael Burry's happy. Do you see the guy who does the big short? He's got like a $530 million short on this. Or
I didn't.
Yeah, it's the guy. It's the big short guy. The guy who, so he's definitely, I think, in agreement with at least for now, downside. I don't know what his, you know, an original target was or what it's going to be, but yeah, he's got some conviction on that one.
Well, I know everybody keeps saying 420, But on the chart, as far as like targets go, I would say 380. That's the next pivot down here. But
Yeah,
this
it's
was also
interesting.
because you had this weekly inside bar. So when it broke bearish the next week, you could have shorted here, hoping the monthly would trigger there and then hold it to here. That was a really nice trade. It's like 700 to 540.
Woo! That's not too
just
shabby.
from that inside week.
Wow. And so when you guys have an inside week like that, you are waiting for the trigger to the downside, right? You're not entering on the inside week. You're entering on the price action after that.
Yeah, unless we have a setup where we think the daily is going to trigger the inside week, because that's all we do. We just use multiple time frames and it's just a domino effect. So if I know my trigger on this candle is 691, if I have a daily setup, like a daily bear flag, I might enter early, anticipating it would break the week to the downside. So I'm already in early before the real trigger hits.
Okay.
But yeah, multiple time frame analysis for the win. And then the last thing I wanted to talk about real fast was Bitcoin. And Bitcoin loves psychological levels, increments of 5,000. So on my charts, I would put a target every $5,000. And then we approached 65,000 and immediately pulled back. And then this is, oh, why did it just shrink like that?
I think it's because there's not a, you're on Binance, or is this the Bitstamp one?
Binance.
Oh, Binance. I'm not
That's
sure.
okay.
Maybe. Yeah, maybe because there's just not as much info on this one. If you went to Coinbase, but I know you probably don't have the levels on there, but Coinbase should have more data there.
Yeah, well, it would be the same thing. So you guys can look on your monthly charts of Bitcoin. So our targets or our short triggers are always a break of a 2 up followed by a 2 down. So the short trigger was here at around 40, 47. And then that was your target 1, target 2, target 3. And it looks like it hit them all. Except,
yeah, that was,
yeah, it did, didn't it?
Cool.
Look at this. Look at that, Jake.
Wow.
Do you see the target and where it hit?
You can't.
That's why we take profit at our targets.
I love it.
We bounced 10,000.
I was gonna say, so we did this recording on Wednesday. So today's price action on Bitcoin, I think it was crazy to see that overnight the move actually affected the U.S. markets. Probably all the markets. I didn't see the other ones, but you have that much kind of deleveraging is what I'm going to call it, because you don't have that type of candle without someone getting lots of margin calls. I think initially that's why we gapped down so hard in the market on Wednesday, just because the market was kind of digesting all that crazy margin calls and all that from Bitcoin's overnight move and everything. I mean, it wasn't just Bitcoin. Litecoin was down 30%. Dogecoin went to 22 cents or something. So it was interesting to see that kind of flow over into the markets.
There is definitely crypto and market correlation. They definitely are correlated to one another.
I mean, I think it's probably more of a risk on, risk off, proxy than IWM or some of these other things that are historically pretty, gauges of risk. I think Bitcoin's kind of your main one now.
Yeah. It's insane. And then I just wanted to point out this inside bar yesterday. So we would have shorted there.
On the break of that low?
Yep, this is the daily chart. So we would have shorted there. And then our monthly targets were there and there. And I even posted on Twitter this morning, I said, Bitcoin, our next target's 27.
That is a beaut.
That's funny.
Hey, price action works.
And Coinbase.
Oh, did Coinbase? I didn't even see what Coinbase did today.
Yeah, so I called the 215 measured move on this day, right? here because I took the range of this giant candle and I said the measured move's 215 and then we hit 208 today. So that was a fun thing to see.
Well, if you all want to learn more about how Sara trades, the setup she's looking for, at Trade Sniper Sara is where you can find her. Twitter is a little weird where you actually have to put in that handle. You can't just type in Sara Strat Sniper because sometimes it won't pop up. So definitely this is where she posts all of her content, all of her educational stuff. She does videos all the time. So Sara, really appreciate you coming on and talking about all of these different plays that have played out. And I mean, we talked about a couple of watch list things. I mean, Tesla could be a short down to the low 400. So we'll have to see how it plays out. But any last words before we head out?
I don't really, just trade what you see, not what you think.
Hey, that is words of wisdom if I've ever heard them. Well, thank you so much for coming on and discussing how you use the strat, some setups that you're looking for that really are fractal. They're the same setup that just continues to form. So if you guys see some of these setups, you know, come back and watch this again, or just follow Sara on Twitter. She posts this stuff all the time. And Sara, thank you so much for being a guest. And let's move on to the next segment.
Thank you, Jake.
Alrighty, let's look at some individual names, some chart requests from earlier this week, starting with Shopify. Shopify has been quite a ripper, and we're looking at the daily versus the weekly chart. And one thing that I want to point out here is this setup that we're seeing here, this symmetrical triangle, was actually found by the auto trend. So all I did was turn on trends, and you can see here, well, you can't see because I already highlighted them green and red, but these popped up. I just double clicked on them, and that was it. Now, what I can also do is I can double click on maybe, let's say, this broadening resistance and this broadening support, turn off trends, and you'll see that maybe, you know, this is your perspective instead. So all I have to do is delete these two, and now we have a completely different perspective. So that's the beauty of trend lines. There's not any perfect, trend line. It's based on what the person's looking at and their style. So if we turn back on trends, we'll lock in this one, we'll lock in that one for this more or less symmetrical triangle here. Went right up to resistance on Friday. I mean, literally couldn't have gotten closer here. So we'll make that red. So clearly this is the line we want to get through. If we do get through that, keep in mind that we do have a gap above. So if we turn on the gap snake here, you'll see we do have a gap right around 1360 or so. So that would be the target above if we did break through this resistance. Now on the weekly side of things, you can see here that we do have this nice volume shelf that has acted as a nice base for price to bounce off of over the last couple of weeks. This is anchored from the COVID lows. Remember, if you ever want to anchor from a different point, you just move this over and you start from where you want to look at. In this case, I think the COVID lows are still relevant. So in this case, we can see a lot of that volume is holding right in this area. And that's exactly where we bounced over the last 2 weeks. If we look at the day of the week seasonality, Tuesday is definitely the strongest day of the week so far in 2021 with a 70% win rate. So going into Netflix, Netflix is a cool example of using multi-time frame analysis as well as the gap snake. You can see we have a huge gap above from this gap down on earnings. This gap would fill around 546, 547 or so. And kind of the same thing we're seeing on the weekly side of things. We have this COVID low anchor VWAP and the volume by price from the, this was the March 16th week. And you can see we're pretty much bouncing right at it. This is a great example of being able to use the anchored VWAP and the volume by price, and just a really beautiful setup here. Honestly, I like the weekly setup. Now on the daily, I mentioned talking about MTFA. If we do look at the Bollinger Bands here, you can see that the weekly Bollinger Band acted as a beautiful level of support here over the last couple of weeks. So this just rode along it. We saw a very similar setup on Snowflake last week, and we had a nice move up. So if we do move up, maybe we test this middle band around 525 or so. We'll have to see how next week plays out. But the weekly candle looks much better than Friday's close, that's for sure. Now, looking at the day of the week seasonality, Tuesday is also the best trading week trading day for Netflix since the beginning of this year with a 60% win rate. And the second best would be Thursday with that 55% win rate. Friday is actually the worst trading day of the trading week since 2021 started. And that's right in line with the price action we saw on Friday. Going into Tesla. Ooh, Tesla. Yeah, Tesla's an interesting one. First of all, we kind of got this descending triangle forming here. You can see that we are still a little above it. If we turn on the volume and the gap snake here, you'll see we have a small gap below here, but we also have a gap above around, let's say 732 or so. So keep that in mind. But if we did start to break down, you would definitely want to create an alert at this previous low here, right around 540. Right click, create your alert. If you want to simply know when the price gets around this area with sensitivity, just choose touch. If you want to know only when the price breaks down, click breakthrough and you're set up. Now make sure you change your confirmation candle to the lowest candle possible if you are looking at this intraday, because if you do have your confirmation candle on the daily, even if the price breaks down through this line, you're not going to get the alert until after the day is over. So if you want to swing trade Tesla on the daily, but you want to get those intraday alerts, make sure to use the 10-minute confirmation candle and you'll be all set. Now, one really interesting thing here on the weekly side of things is if we look at the Bollinger Bands, weekly Bollinger Bands here, you'll see that over the last really year and a half, we have not come anywhere close to the lower Bollinger Band on the weekly chart. So the closest we came was back in March of 2020, and we're still very far from it. But now look what's happening. We're starting to ride right along and down with the declining Bollinger Band now. And you can see here, the last time we saw that, this was back in 2019, and this marked a further move to the downside. Every bounce was sold into, and we did continue down for quite some time, about two and a half months. So is this the start to a bigger move down? We'll have to see, but I'm not a huge fan of the price starting to ride along this lower band here. Something to keep in mind if you are long on Tesla. Now, Nvidia, this is one that had some decent news on Friday. We had the reverse split news, nice gap up. Couldn't really hold it though. We closed much lower than we opened. You'll see here if we do add the gap snake here, we have a gap above that would fill right around 635. We also have two gaps below, so keep that in mind for the downside. And then on the weekly side of things, we'll kind of see the same thing that we've been seeing here on a couple of the other names, Netflix and what was the other one? Shopify, where if we anchor from the COVID lows, we've got this nice base, this volume shelf forming here that price has bounced off of over the last couple of weeks. And looking at day of the week seasonality, you can see Monday is the best day of the week with a 61% win rate. Tuesday is the worst with a 40% win rate so far in 2021. Moving on to Boeing. Boeing is one that had a pretty nice Friday, to be completely honest. Now, let's move the volume by price to this swing low here. You'll see that we literally just moved right up to this resistance zone above the supply zone. So this was the swing low anchored VWAP, as well as this volume shelf acting as a resistance zone for now, because remember, anytime price is below this, moving into this volume shelf, that's going to be resistance initially. That's going to be a supply zone where people are getting out at break even that had to deal with this drawdown. Now, if we anchor another VWAP from the top here, you'll see if we do start to break above, this 246 area would be an area to watch to the upside. So one thing that I wanted to point out here as well, let's take off the gap snake and add the multi-time frame analysis again. And you'll see here, if we look at the 50-week EMA, we've really bounced off of that perfectly. So that was definitely the level on the longer term side of things that held. And you can see that it held pretty well as well in February once we broke through it. Now, do we hold it? We'll have to see, but we do have the gap below to keep in mind. And as I mentioned, the main thing here is this swing low anchored VWAP and this volume shelf that price just pretty much closed right at for this week. Now, moving into ABNB. This was something a lot of people loved, and now not so much. It is just really taking a hit. You can see if we're looking at these areas that have been kind of areas that have been sold into, using the anchor VWAP from the swing high here, you'll see that back in March, back in early April, and then once again back in late April, this has been resistance. So if we do move up, this anchored VWAP above would definitely be an area of interest above. And that would be right around 157 for now. But remember, this does move with the price. So if the price continues to be below this anchored VWAP, this is going to continue to move down. Now, on the weekly side of things, if we anchor the volume by price from the IPO, you'll see that we do have quite a bit of volume starting to aggregate here. If we anchor VWAP from the IPO as well, that's closer to around 165, and you can see how well that acted as a rough level of support, a level of interest for buyers, and supply to simply dry up until we broke down 3 weeks ago. So all in all, not the best looking chart. Now, the next one we're going to look at is Coinbase. You can't really do a ton of technical analysis with something that's this new. But one thing I wanted to point out here that I thought was pretty interesting was the fact that I looked back and Bitcoin actually topped out the day before Coinbase IPO'd. So you can see here on April 14th, this is when we IPO'd. We've gone down since then. And you can see here, BTC USD Coinbase. The high here was back on April 13th. So how interesting of a correlation is that? Definitely interesting. So Coinbase, the main thing I want to point out here is the fact that we do have a very interesting correlation with the IPO and the Bitcoin highs. You can see here that we're down from the highs, the IPO highs about 47%. Now, from the highs to the very lows of this week, this has had about a 52% range. And you can see here since pretty much we IPO'd, an interesting fact here, Wednesday has a 0% win rate. Friday is the highest with a 50% win rate, but I wouldn't go home bragging about that. 50% is literally not what I'd call any statistically significant statistic to go off of. 50%, if that's the best day you've got, that's not necessarily what I'd call a great trading asset for now, but we'll have to see. But there's nothing that looks great on this chart, and it's still too early to even back test anything, right? So if you want to go and strategy test a particular strategy on Coinbase, there's not enough data points here to even go off of. So in this case, I won't even touch this. This is not advice. Remember, nothing we say on here is advice for you to go do any of this stuff. But me personally, as a trader, I wouldn't touch this. So that's just kind of my trading style. But there's always a trade. If somebody likes trading Coinbase, that's awesome. But for now, we are very far below this anchored VWAP from the IPO. So that is all for the individual names and the chart requests. Hopefully this was useful into the week ahead. Remember, if you do enjoy these shows, like and subscribe to our YouTube channel. And remember, if you want to try out any of these different features, we do have the 7-day free trial. Thank you everyone for watching tonight, and have a great rest of the weekend and into next week. Have a good trading week.